And now for our currency of the week, the Aussie dollar. Okay. So the Australian dollar dropped with commodity prices. It's not only oil, but it's also other commodities like iron ore, which is the key export of Australia. Australia also exports copper and other metals, especially to China. And there are worries about China. Industrial output came out weaker than expected. The forward-looking Caixin PMI, Purchasing Managers Index, is just about balanced between expansion and contraction, weaker than had been expected. Retail sales missed expectations as well. They grew less than expected, but at least the latest jobs report was excellent. So tonight we'll have another jobs report. And the Reserve Bank of Australia is firmly on hold. They do not intend to move anything in their policy anytime soon. In the United States, well, worries about Trump. Well, when I prepared this presentation, I wrote shrugged off for now, but things have changed, at least in the last 24 hours or last 48 hours. The US president is really hurting the US dollar. So they were shrugged off, but not anymore. The US economy looks weak. We've mentioned that. We have weak retail sales, poor wage growth. And other figures do not look that optimistic. When the US dollar was strengthening, it strengthened more against commodity currencies than against the euro and the pound. The euro, as you can see, is now on a roll, but also the Australian dollar is recovering. Housing in Australia is an issue. Sydney is the second most expensive market after Hong Kong. Prices rose nominally, not looking at inflation, 4 times. There are fourfold increase in the past 20 years. There was also a rapid population rise. Australia accepts immigration. They have the point system, and borrowing is cheap. As you can see from the graph here, when the RBA cut rates below 3%, house prices, at least in Sydney, the biggest city, have been on the rise, but they have been on the rise also in Melbourne and other places. Some places that were hit by the commodity bust or the slowdown in commodities did not enjoy the same success, but they still, well, prices are still on the rise in Australia, okay? So there is talk, always have been worries about a bubble. The government wants to boost supply. I've heard about a project turning old military barracks in Melbourne to, well, a neighborhood. And so far, at least, housing does balance out, does counter the slowdown in mining. So that's what's going on in Australia. The shift of the economy is moving from extracting metal, which is still very important, to housing. But the debt to after-tax income ratio has reached 190%, and that's quite worrying. So it's better to grow your manufacturing sector or services sector or exports, whatever, but not housing. So far, it did balance out the economy, but we can certainly worry. The government also introduced measures to limit more debt taking, so that should sort of take some air out of the bubble before it bursts. But there are certainly worries about housing in Australia, also in Canada, by the way. So, when we're talking about the Aussie dollar, commodity currencies, commodity prices are the key. Okay, China becomes more important once again. We've seen the impact. We had a few months when China was not having such an impact on the Aussie dollar. It has a new impact now. Watch out for housing. It doesn't have an impact on the Aussie dollar, but it's lurking in the background. Always keep that in mind when you're trading the Aussie. So any bullish positions on any longs in the Aussie should take into account that we have housing always there. I see more downside risks to upside risks. The US slowdown, what we're seeing now, the Trump trouble may help the majors, but not, it helps the euro more than the Aussie, okay? It helps the pound, even with all the issues around Brexit, more than the Aussie, more than the Kiwi, more than the Canadian dollar, okay? So that's my opinion, and let's end this segment about the Aussie dollar with looking at the chart, at the bigger picture. Let's zoom out to the daily chart of Aussie dollar. So we're currently between 73.75 and 74.50. That's the current range. off the lows, but not going too far. Resistance 75, 75.50, 76.10, and way above 77.50. To the downside, we have 73.30, 73.10. They're very close there. Then 72.50 and 71.60, which is the ultimate line in the sand. Okay, so this concludes our segment about the Aussie dollar. And we have another comment here from Ed. It says Europe affects China and China affects Australia, so Europe can do the damage. Yeah, sure. Well, it's an interconnected world, and we have everybody influencing everybody. Okay, so of course, if we have a slowdown somewhere, we can have a slowdown everywhere. If the administration in the US gets into deeper trouble, then it will affect growth in Europe and China everywhere.